Good morning and welcome to the Home and Finance Show. This show is designed to provide you with credible and current information about buying, selling, renovating, refinancing, building, and rebuilding your home, and credit. So I also want to introduce my co-host today,
Diana Rice Wilkerson with Fairway Independent Mortgage. Good morning.
And what does Diana Rice Wilkerson do?
I am a loan officer. I navigate you through the loan process, whether you're refinancing or purchasing or building new. My job is to show you the money.
Show you the money, absolutely.
Yes.
Alrighty, real quick, we need to get to today's show because it's an amazing show, and we've had to wait for several months to get this young lady, so we on with the show. So what we would like to do is introduce Stacy Stuber, and she is a housing counselor for the housing options provided for the elderly. So that's a mouthful, okay? So on with the show, share with us everything you can. I know you're gonna be running, but can you tell us what that really is all about, Stacy?
Yeah, great. Thank you. And hello to both of you. I'm so glad to have this chance just to share the information with the folks that follow your show. So as you mentioned, my organization, we just abbreviate it HOPE, because you're right. Housing options provided for the elderly is a lot.
Mm-hmm.
So we're a HUD-approved housing counseling agency. And my specialty, my focus, I've devoted most of my time over the last 15 years to doing reverse mortgage counseling. So as a housing counselor, we're completely separate from any lenders, from any banks. We're independently funded. In fact, most of our funding comes from HUD, Housing and Urban Development. And our job is really just to help seniors that are thinking about a reverse mortgage get more information on that option. So that's really our sole focus. So glad to have a chance to get that message out there.
And Stacy, with the reverse mortgage, which I think is one of the products that probably the borrowers, many borrowers could really benefit from, but they don't understand it, they don't trust it, they're just skeptical, which I totally understand. But with that program, can you share with the viewers, what that program is all about and what you specifically do when they are getting counseling, what your role is, what you're really talking about, and what you're trying to achieve?
Sure, yeah, thank you for asking that question. And I also understand that, you can be nervous about this program. It's, for most people that I talk with, their house is their biggest asset. So the counseling portion of it is really just to help the person who's contemplating the reverse mortgage understand how it works, what their options are, and just help them relate it to their situation. So we're completely neutral and we don't have any say in the loan process. We're here just to help them understand how it might work for them. And for a lot of our seniors, and you do have to be 62 or older to be eligible, they have a lot of money tied up in their house. And as you know, with the cost of everything increasing, it can be a struggle. And with a chance to perhaps borrow against some of the equity in the house, it might really help our seniors pay for necessary living expenses. And, I do have a lot of my clients who are, low to moderate income. They just don't have a lot coming in every month, but yet their house is completely paid off, or they just have a small mortgage on it. So the idea is that they can access those funds and borrow that money. And then while they're living in the house, they don't have to make a payment. Now, it does eventually have to get paid back. It's not a giveaway, it's a loan. I want to be clear on that. But the homeowner can live in the house without making a payment for as long as they want. The loan doesn't have to be repaid until they don't live there anymore. So die, move, or sell, that's when the loan has to be paid back, plus the interest that is accumulated. I mean, we call it a reverse mortgage because the balance is getting bigger. That's, part of the program you have to understand. But for many families, it is a way that it can help them meet today's living expenses. And as long as they're careful with how they use the proceeds, it's not going to jeopardize other programs that they're eligible for. It's not going to impact their Social Security. If they are a lower income client who might get heating assistance or, any type of assistance programs, we want to talk with those homeowners and make sure that they know they have to be careful not to keep too much money in the bank. But I find for a lot of my homeowners, they're a little nervous about the reverse mortgage because they don't want to impact other programs that they're getting. So I just want to reassure anybody, getting this information. That's part of my job as a counselor, is to find out what other programs might be out there and talk about eligibility, because we definitely want to make sure that we protect anybody so that they don't jeopardize any other benefits that they're receiving.
A couple of questions that I oftentimes get is, am I losing the deed to my house? Do I keep the deed? And also, do I pay taxes on those funds?
Great questions. So yeah, you're still the owner on the property. In fact, that's one of the primary things that we have as a counselor to make sure our clients understand. They're still the owners on the property. That is not going to change. And that kind of goes back, there's this, I don't know, old wives' tale that when you get a reverse mortgage, they get the house,
Right.
the bank. Not true. I can reassure you. Definitely not true. It's just like any other mortgage loan. You're the owner. You're in charge. It's your house. You want to sell it, you go on and sell it. Anybody else can live there with you. Nobody cares about that. The number one requirement is that you live there. Well, all my clients live there anyway, so that's nothing new. But yeah, I just want to reassure everybody about that, because that is kind of a common theme that I hear repeated. You're not giving up your house. It's your house. You're taking out a mortgage on it. It's a loan, but it's still your house. As far as taxes, what I tell everybody is think of it like a loan, because that's what it is. You don't have to pay taxes on a loan. There's no tax implications on borrowed money because it's not income. So I can reassure them about that as well.
Excellent.
So Stacy, I know you're sharing a little bit about what's covered. So what about, what would you say the it sounds like to me, I'll just say, is this the number one and number two question? I know that they don't understand, it would be very hard for anybody to understand that, what do you mean I don't make a payment? Does that come up quite often? And then of course the fact that, would you ever be in a situation where you're going to take my house away from me? And I actually have another one. When do you determine that maybe it's a good idea if they have family members to bring in, just so that everybody's on the same page? Or do they ask for that?
Yeah, great question. And I'll respond to that first. We always encourage family members, trusted advisors, whoever you would like to have participate in the appointment. It's always good information. Another set of ears is a good idea, because sometimes other people hear things that you might not hear. So definitely we encourage anyone else to participate. We want them to. And then I already forgot your first question.
Oh, I was just reiterating the fear of not understanding that I don't make a payment, so I'm sure that comes up, quite often. How long is the session? Is it just one session?
I usually do my appointments in kind of a two-part session, because I do my own intake. If somebody calls for an appointment, I talk with them, get their information, introduce myself. So that's kind of a mini interview. The appointment itself is an hour and a half. There's really quite a lot we have to cover. As I said, one of our jobs is to make sure that we understand enough about somebody's situation that we can talk them through all the options. And sometimes I get clients who have a kind of a complicated situation. I have clients who maybe have an expensive home, or they have wealth in other areas. And so they're trying to decide, is this a product that would help me? I think there's also this kind of impression that the reverse mortgage is the option of last resort. Like, oh, you only do that when there's nothing else that you can do. And that's not always true. A lot of people use this loan product, as kind of a planning tool. So I get very high wealth clients that they make more money than I do, certainly, that are getting a reverse mortgage. So I just encourage anyone, if you have a lot of equity in your house and you feel like it might be something that you want to consider, because I know the commercials are out there, I see them too. The idea is, if you get independent counseling from a housing counselor, we can help you just kind of understand, is this something that you want to pursue further? And there's no obligation that you're going to go on and get the loan. We're really here just to help. And for most of my clients, there's no charge for the counseling. Now, for my higher income clients, if someone makes over about $40,000 to $50,000 a year, then we do collect a $200 counseling fee. But if their income is under that, for the most part, we're able to waive any fees. So there's no cost or obligation to talking to a housing counselor. And it's our job to be neutral. You know, we don't have any say in the loan process. We just want to get the information out there.
Stacy, so one of the things that you said was that the owner needs to stay in the home. What happens if the owner is ill, needs to go into a nursing home or a rehab home for a while? Talk to me about that.
Yeah, great question. If it's a temporary absence, no big deal. That's fine. And you can actually be gone for up to 6 months for any reason. If you want to travel, go stay with family, that's always fine. And a medical absence is actually allowed up to a year. So that's plenty of time to get better, rehab, whatever you need to do, and then come back home. So yes, there are protections about that. When we say you have to occupy the home, we just mean you have to live there at least half the year, which for most of my clients, hey, they're there all year long anyway. Yeah.
But ideally, this also means if a person has a vacation home, let's say a person owns their property and they want to buy a vacation property. Actually, they could reverse potentially their primary residence and maybe even get cash out, who knows, but also buy a vacation home. So they wouldn't have a mortgage on their primary residence, but they would on their vacation home, and they could split up the year, and that would be no problem in theory.
Yeah, as long as they split up the year plus 1 day.
Okay.
Their primary home, they have to live there 6 months and 1 day.
Okay.
So yeah, because I have clients who own multiple homes. You know, as I said, I do talk with, you know, higher wealth clients. As long as this is their primary residence, that's the main requirement. And then I had kind of gotten distracted from the question that Janice asked earlier about, you know, people get worried that they're going to lose their house. So we talked about the fact that there's no monthly mortgage payments that are required. That's the whole idea of a reverse mortgage. But remember, you do still have to pay your property taxes and your homeowner's insurance. And that really is the one way that people can get in trouble, is if they haven't been able to keep up with those expenses. I did want to share with anyone, you know, catching your show today that Indiana does have a rescue fund right now. It was part of, you know, the rescue package that came out some time ago with the Biden administration. And if anyone listening or watching the show is having difficulty paying, if they have a regular mortgage payments, but even if they have a reverse mortgage, if they're having trouble paying their taxes or their insurance, the rescue fund is now accepting applications, and they have $50 million that's available for Indiana.
Wow.
So the number to call is 877-GET-HOPE, or the website is 877-GetHope.org. And I have been a little frustrated as a housing counselor that there's not a lot of outreach being done. I think a lot of families that are struggling are not aware that this rescue money is out there. And I want to encourage anyone who thinks they might be eligible to get their application in. The number one criteria for that rescue fund is that they have to have had some sort of a financial impact from COVID.
Okay.
Mm-hmm.
Well, guess what? That's like 99.9% of us, right?
Right.
So for almost all my clients, I can come up with some way that COVID financially impacted them. So I just wanted to get that word out, let people know that rescue fund is accepting applications. If anyone's behind on a regular mortgage, or they're having trouble with taxes, homeowners insurance, make an application.
Excellent.
So Stacy, we said that 62 years or older is when you can qualify for this particular mortgage, depending on other situations, I know. But suppose one of the spouses is younger than the other spouse, and then something, you know, tragic happens. Does that person still get to stay in the house? The younger spouse?
Under most,
the younger spouse?
yeah. So the younger spouse, Under most circumstances, yes. As long as they have kept up on the taxes and the insurance and they still live there and they're still married, they would be able to continue living there. Now, the underage spouse has no rights to the loan. So any loan proceeds that haven't been borrowed are shut off because only the eligible borrower can access, the loan funds. But whatever's already been borrowed still doesn't have to be paid back. The loan stays in place. They still don't have to make any monthly payments. And the younger spouse is still able to live there as long as they want. They just have to keep paying those taxes and the homeowner's insurance.
So I don't want to be confused. So if the younger spouse has decided that they want to move on, and they want to sell the home, are you saying they cannot get the profits?
Sure, they could sell the house, and
mm-hmm.
they could sell the house, pay off the loan.
Okay,
and then
I just
keep
missed a
whatever's
part.
left.
I just missed a part there when you said something that they couldn't qualify for. I'm not sure what that was.
That's for the drawdown. So like with the reverse mortgage, you have access to the funds
Gotcha.
through that line of credit
Yes.
or whatever. You can't draw down any more
Makes
money
sense.
that way.
Makes
Yeah.
sense. Which actually brings me to another point. And you mentioned, of course, the taxes and, of course, the insurance. So when you're having these meetings, and again, a lot of this could be the fact that they cannot pay the taxes anymore, or homeowners insurance. I mean, do you help them with that, be on a budget or where it can be allocated, the money when it's due, they can actually pay the taxes or pay the homeowners insurance? Is that something that you're part of?
I mean, part of our job is to make sure we go through a cash flow assessment and just look at their budget and make any suggestions that we have. We're not there to say do this or do that, but just to talk through kind of the options. So we do address that when we're talking about cash flow. Now, if they have had some struggles paying, for instance, property taxes, they could still qualify to get the reverse mortgage, but part of their credit would be set aside to be used for future taxes and insurance.
Right. Mm-hmm.
So that's just a protection to keep them from getting behind again.
Got it.
So part of their loan proceeds would be held just for that purpose.
Got it.
I had a reverse mortgage client that was a requirement. That was a requirement for them. And they loved it, actually. It impacted how much they got back available at closing, but they loved the idea that they no longer had to worry about taxes and insurance. And so that's a plus. And I do think a lot of people they kind of like that idea. And then I had a lady who I closed on, and what we did was just set up the monthly deduction out of her bank account for her taxes and insurance. So once again, she didn't want to forget it. The other thing that's important too, just wanted to mention, you also have to pay homeowners association fees if those are required as well. Otherwise, you can lose your property if you don't. So
yeah, good point. And condo dues too. I know we don't have a lot of condos.
Right.
We have some, but not a lot in Indiana. But yeah, those property charges are still required. So,
Stacy, do you find that most people, once they go through counseling, so they come in kind of maybe unsure, skeptical, whatever, but then once they go through counseling, how do you feel they feel after that? Do you feel they feel like they get it more, they're more knowledgeable, they're more prepared to move forward?
They're definitely more knowledgeable because that's our job. Not all my clients go on to get a reverse mortgage. Right now, I would say probably 25 or 30% hear about the product, learn about it, and for whatever reason decide maybe it's not for them.
Right.
The clients that are getting the reverse mortgage, I do think it helps to talk through it with a neutral person. And that way they feel a little more confident. Okay, now you're not just, a lender, you're just a housing counselor explaining my options. So before they go on to the next step in the loan process, they do have more information. And a lot of times I'm just kind of telling them stuff they already know,
Right.
But it helps to talk through it. I think adult education tells us we have to hear something 3 times before we really learn it.
Exactly.
So,
Exactly.
always good to hear it multiple times.
I like the fact that you stress that it is a loan. It's a loan like any other loan, and it gets paid back. Now, let's fast forward to that situation where the home is either sold or the owner passes and the home is now on the market or going on the market. And let's say, although I can't envision this, but it could happen, let's say the owner ends up owing more on the house than what the house is worth or what it sells for. Talk to us about what happens with that deficiency. Because some people
Yeah,
are
great.
concerned about that, particularly if there are other assets that are available in the estate.
Right, because, and think of it right now, we might be in a housing bubble. Housing prices are really up there right now. And you all know more about that than I do. But if someone gets the reverse mortgage and then maybe we do have a slump, maybe home values do go down a little, and maybe somehow at the end of this loan, they do end up owing more than what the house is worth. That's possible. It's not very likely, especially in Indiana. Our home prices are pretty stable, I would say. But that's why these are FHA insured, because that FHA mortgage insurance protects any homeowner, their family, their heirs. If there is a shortfall at the end, if somehow they do end up owing more than what the house is worth, maybe if home values take a slump or anything or something like that, that mortgage insurance is going to make sure the lender gets fully paid back. So it's not going to come back on any other assets that the homeowner has. It's not going to come back on the kids or the family that they're going to have to pay anything else back. That's why these are FHA insured mortgages. There's a few extra closing costs because of that. I'm not going to tell you there's not. You pay for that FHA mortgage insurance through the loan, but it does make it a very safe and secure product. You are protected from ever having to pay back more than what the house is worth. I can reassure everybody about that. That's why we have that FHA mortgage insurance.
Exactly. What would you say the number one reason? You made a comment about those who don't maybe feel it's for them, or do you think it's they really don't understand it, or why? What's the number one reason they say this isn't for me, or I don't want this loan?
I mean, probably the number one reason is just because they don't think they're going to live there a long time. If they think they're going to move anytime soon, this is kind of an expensive loan in the short run.
Right.
And I do have a few cases where, I've got a client now who's considering the loan, but she really wants her daughter to be able to live there after she's gone.
I see.
And she knows that loan has to be paid back when she dies. So we're trying to kind of work out, are there options here that we could talk about? And interestingly enough, her daughter is 63.
I see.
So I think they may put the daughter on title and do the reverse mortgage in mom and daughter's name, which would be kind of a cool solution if it works out, because that way, even when mom passes, if the daughter's already on the loan, she could continue to live there.
Absolutely.
So we might see something like that work out for them. But yeah, those are kind of some common reasons.
Okay, that makes sense.
Stacy, are there other reverse mortgages that are not HUD insured mortgages? Do you do counseling for those as well?
I do for a couple. We call those the proprietary loans. So for non-FHA reverse mortgages, and I do some counseling on those products on a couple of them as well. Most people, the FHA loan is going to be the cheapest loan that allows them to borrow the most money. With the proprietary loans, the interest rates are so much higher. I saw one the other day, the private loan, it was almost 10% interest. So it's a much more expensive loan in terms of interest. The private loans might have lower closing costs, but it really only makes sense for someone to look at a private loan if they have a really high home value, like over $1 million.
Right.
So in some cases, the private loans may be an option if they have a very high value home, or there's some reason why the FHA loan wouldn't work for them. But I don't do too many of those appointments. There's still, I think probably 90% of reverse mortgages are still FHA, HUD insured reverse mortgages. The vast majority are FHA reverse mortgages.
And is the maximum loan amount the same as forwards? Like our maximum loan amount is like 420 something. Do you know if reverses are the same or is it more?
Well, there's no true maximum loan amount. It just depends on the home value. And then you can borrow a percentage of that depending on your age and interest rates. And of course, right now, unfortunately, rates are up. Everybody knows that. Just like everything else, right?
Yes.
So the amount that somebody can borrow, it's different for every individual. There's not a set amount. It depends on their age The older they are, the more they can borrow. And then it also depends on interest rates. And just like other mortgage products, when interest rates are up, you can't borrow quite as much.
Right.
So yeah, it's different for everyone. There's no set percentage.
And most people who you talk with, what's their primary purpose for considering the reverse mortgage? Is it to stop their mortgage payments, get cash out? Talk to us about that.
Yeah, for a large percentage of my clients is because they have a mortgage loan and they're making payments on it. And it's getting to be a struggle. And so they look at all this equity they have and they've got the mortgage, maybe paid way, way down, but they really consider the reverse mortgage to refinance, pay off the regular mortgage, and then they could quit making mortgage payments. That's the number one reason I would say that I see people getting a reverse mortgage. Because these days we all, the days of paying off your house before you retire are over, right?
Right.
Everybody refinances. So, you can be 80 years old and have a mortgage loan. So yeah, I would say that's the number one reason.
Excellent.
So another question, we also know that a reverse mortgage can be used if someone wants to buy a home.
So the name of the FHA reverse mortgage is, we just abbreviate it and call it HECM, HECM. So the joke is like, what the HECM is a HECM.
Okay.
But there's a HECM for purchase product. And I actually think this is one of the most underutilized loan options out there.
Yes.
And I don't know if that's because real estate agents, you all know about it, but a lot of real estate agents don't know about it. A lot of loan officers don't know about it. So it's particularly a good option if someone needs to downsize. Because if they need to downsize and get rid of a big house, they could take what they could get from that sale, use it as a down payment on the next house, and then with a reverse mortgage to finance the rest of that purchase, they still wouldn't have a house payment. So I think for people that need to downsize, it's really a conversation to have. And we do those counseling appointments too.
Okay.
And again, it's our job just to help assess the options. We don't have any opinion or say in what somebody chooses to do. But yeah, I think the HECM for purchase product is, kind of a pretty exciting tool that's out there that a lot of people just don't know about.
We do too.
Well, Stacy, we cannot thank you enough. Thank you for
Absolutely.
your 100% just awesome information. And I trust that those viewers today have learned an awful lot. I would like to have you back whenever it is you're available so we can continue our conversation. In the meantime, you take care and thank you again.
Great.
Thank you again.
Thank you.
Bye-bye.
Have a great day.
Have a great day.
Yes.
Thanks so much.
And viewers, thank you for tuning in today. We hope you heard a lot of great information about the reverse mortgage. We will be talking more about it in the days to come.
Everyone have a blessed day.
Bye-bye.